Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. Once again, we are fortunate to have our man from Raymond James, Mike Carnevale, to tell us, as in the words of Wayne Gretzky, not where the puck is, but where it's going. And life is interesting lately. Not happy maybe, but question is, and we don't know just exactly what right now, but are we in a depression? I mean recession, oh God, in a recession.
I mean, it's bad, but it's not that bad.
Are we getting to recession? What does it look like?
Well, I think, if you look at the economic, the technical stuff, we're closer today than, we were a month ago. If you turn on any of the business shows, it's like they all want to be in a recession because they're all talking that way. But, technically, I mean, it's tough to have a recession when you have unemployment not going up. And you have leading economic indicators not negative for 3 months in a row. They're 2 months in a row. No, not in a recession now, I don't think. But, getting closer and closer to that, and I think the stock market kind of is bearing that out. We had a bad January followed by bad February, bad March, bad April, bad May, and should be getting better. And then June came around, and June was the worst month of the entire year, down about almost 7%. So definitely moving closer to that recession, but not there yet.
Not there yet.
Right.
But we should have the next figures by the end of the month. So next time we'll
know.
Yeah, and you will either come here in your best clothes or
correct.
Wearing sackcloth and ashes.
That's correct.
And we can wait.
Yep.
Now, meanwhile, let's see if we can squeeze some happy news out of you.
Okay.
All right. Look at how we start now. Dow, the worst month of 2022 in this June.
Right.
Okay, though, down 6.7, not exactly time for happy talk.
Correct.
The 2022 Dow is down 16% overall so far?
Right. But, that's the good news. You were looking for the good news, so that's the good news. The other news is the S&P 500 is down 21%, NASDAQ's down 30%, and Bitcoin, which a lot of people follow, is down, more than 30%.
Well, to be fair to the Bitcoiners, when they go up, they really go up.
Right.
And when they go down, they really go down. But we need at least another century of Bitcoin results to really go with that.
Maybe the positive sign is interest rates, is Treasury yield. So everybody is saying, "Oh boy, rates are going up." Not really. The 30-year began June at 3.06, It ended June at 312, and essentially we ended the month with all the yields, the 5, 10, and 30, all above 3. 2 of those now are under 3. So in the last couple of weeks, interest rates by way of treasury yields have started to go down.
I knew we'd get something good out of you.
And that's good. And I think a lot of that might have to do with Powell when he talked, did his semi-annual monetary policy testimony before Congress in June. I think, he was, talked about, inflation is by far the where they're focusing all their efforts in, and he didn't really waver on that. And I think that might have calmed, at least the bond market that.
They're believing him.
Yeah, calmed them. I don't know if belief is there anymore, but it's not the panic it was in the beginning of June. Those technical indicators we like to look at, you look at a big picture, the technical indicators always seem to foretell what's going to happen. It's just that right now, the indicators are so positive for higher stock prices, but they're trying to battle against short-term recession concerns. So you could go over all the 3 technical indicators, but they're not as meaningful as they should be. I mean, if you just looked at the technical indicators, you'd say, oh, the market should be doing well, and we know it's not.
When you say that, okay, you're looking at the 200-day NYSE moving.
Right.
19%
Right.
is either a very good sign or maybe not.
It's a very good sign. It means that over the past year, only 19% of New York Stock Exchange listed companies are above their average price, their average yearly price. So when does that happen? It happens after things have dropped. So if you're looking, well, sure, they could keep dropping, but odds would favor you're at such a low point that a rebound could begin.
You use that word could.
Right.
Could we go, roughly dance around the 19 for a few? You have it down as 19 versus 31 a month ago.
Right.
19%. Could we just dance around that for a few months if we are in a recession?
Sure, or go even lower. Could go to 0.
I knew I'd get some pessimistic stuff.
But anything under 40 historically is what they would call oversold.
Yeah.
So, hey, nobody knows for sure. You're playing odds. Odds would favor a rebound versus a continued drop. But that's just what it is. It's,
All right. Well, the volatility index.
That's another one. You want to see that high, meaning there's a lot of fear by investors. And when do people become fearful? After something bad has happened, after something has dropped, not at all-time highs. So that index, that anything above 25 is considered historically high levels of fear. A month ago it was 26, today it's 29. So there's more fear coming in. That's a good sign, because history shows the public is usually wrong. They become fearful after a drop, and they become euphoric after it's really gone up. So they're always chasing history. That usually is a losing long term. Short term it could work, but long term that's a losing game.
Well, you're basically saying the herd buys high and sells low.
Correct.
Okay.
Correct.
The stochastic oscillator.
Yeah. So that just talks about, well, where's the price of anything, a stock, an index, in comparison to where it's been, high or low. And there's a wide category there. It ranges from 0 to 100. Usually 20 to 80 is considered fair value for the market. A month ago it was at 38. Today it's at 29. So it's getting very close to being the next level down, which would be oversold. So let's say it gets there. You have the oscillator oversold. You have fear really high, and you have the moving average really low. If you were a betting person, you'd say, we got to be close to at least some type of recovery. Doesn't mean it's going all the way back and you're going to recover everything. But again, we're in a period right now where there is massive fear. People are saying, I mean, I hear it every day where people say, oh, I just got my statement. You know, I lost blank, 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 and they feel in a dollar amount. And I say, well, lost is like it's not coming back. You haven't sold anything. It's dropped in value, but you haven't lost it. And people always tend to go to extremes. Extreme pessimism now. The other side is extreme euphoria, where they can remember the highest their value of an account ever was. Now, that it isn't an end of the month or the beginning of the month. It isn't on a birthday. It's on an anniversary. They can pick the day, February 15th at 2 o'clock. I had this much. I've lost all that. So again, it's the technical indicators try to put a sense into the greed and the fear area. And you want to see a lot of fear, a lot of pessimism, if you want to get a turn. And we've been seeing that. We've actually been seeing it for a couple of months. But it's to the point where, hey, some of these technical indicators are at levels they were at the start of the pandemic in March of 2020. Doesn't mean it can't get worse, but history would say I wouldn't be betting on it.
You wouldn't be betting on it
getting worse. It doesn't mean everything's great and you're going to recover everything that declined in a week. But again, all it's doing is we're talking about odds.
And as they say, all things being equal, the technicals are predictors.
Yes, they're short-term predictors.
Now, the past month, if there's been anything, there's been news.
Right.
You have the major news is big hike, or what is considered a big hike by the Federal Reserve.
Right.
0.75%. The Fed also cut the growth forecast of growth to 1.7 from 2.8 for next year.
Yep.
They raised their inflation, and you use the word guess,
right,
to 5.2% from 4.3%.
Right.
If you have anybody in your household who went to the market for food, say today,
right,
and exclaim what it is, 5.2 is not going to be fun in the coming year.
You don't know. I mean, as quick as this inflation picked up, it could tail off. I mean, not likely, but it's not so much the number, it's, well, what is the Fed saying? The Fed is saying, yeah, things are slowing down and we think inflation is going to be higher than we first thought it was. That's essential. Whether it's 5.2 or whatever number, I don't think that matters. It's, well, what are they trying to tell you? They're trying to say, the economy is slowing down. We have high inflation, higher than we thought it would be. So we're raising rates to try to tackle that high inflation, but not to a point where we get negative growth or a recession. So that's why they did the 75. They're going to meet again in this month in June. They're going to raise it again, obviously. But they're in a position now where they're going to be able to control inflation. Because that's really just I mean, inflation a lot has to do with spending. So how do you reduce spending? You make it more expensive to spend. So they can do that. The question is...
Where you mean they can make it tougher to lend money to banks?
Correct. Right. Make it tougher to lend money to people to spend.
Okay.
So bringing down inflation, I think they're going to be able to do that. The question is, can they bring it down with the size of rate hikes they're doing and not affect the jobs market or the economy to the extent that the economy contracts?
Well,
History would say they've never been able to do this.
yeah. Well, you remember, well, you don't, you're half my age. How old were you when Nixon closed the gold window?
Oh,
Were you at all?
yeah, 10 years old.
10 years old. When he said that, I didn't know what it was.
Mm-hmm.
But by the time I got out of the Army, I knew what it was.
Okay.
And I knew what was happening. And, what a lot of people were writing, I said, okay, I can't go into a bank now and get a piece of silver that represents the dollar, where I could before Nixon did that. So what was backing the dollar? Well, probably Saudi Arabia, if anybody, was backing the... Is it just the trust in dollar because they can maintain interest rates? What keeps the faith?
Well, I think it's a belief,
Which is faith.
which is faith. Really, that's it. I mean, why do countries put excess funds in the U.S. Treasury? Well, it's the belief that, no matter what happens, the U.S. Treasury is going to be worth something.
And it's also the place where you sell everything, so that's where your
Right.
dollars can come out and go in.
Yeah. So I mean, it's the market is really based on a belief that, this is all worth something.
Okay.
But it doesn't. But
Well, I'm not going to go back to school to figure it out.
right. Yeah. I mean, I think it's a belief. I mean, around the world, other countries are following what we're doing in raising rates.
We
So
also-
it's a worldwide thing.
We also have a vested interest in believing it.
Of course.
Even if it's crazy, we still have a vested
Correct.
interest. Right. So the countries, I won't call them our peers, but other...
Well, these were the other central banks that.
Yeah, the others are in concert.
Yeah.
Russia cut their rate.
Yeah, that's a special situation.
Yes,
though.
it's
I
a
mean,
very special situation.
Yeah, I wouldn't read too much into that.
No, Powell gave his semi-annual talk to Congress, said inflation is the number one issue.
Yep.
Problems with Russia, Ukraine, China, Russia, a recession more likely but not guaranteed.
Right.
Yeah, I would say so. Michigan consumer sentiment.
This is another good indicator.
Why Michigan?
Because the index was started at the University of Michigan in
So
1952.
it's not just Michigan.
No, it's the University of Michigan.
Okay.
Consumer sentiment indicator, and it really began in 1952. And this is another contrarian indicator. Last month, it had its lowest reading in history. It was at 52.
Okay, to our audience, especially to me,
Yeah.
you're going to have to explain why the Michigan index has index of consumer sentiment, why people have put stock in that.
Okay, so this is, like I said, this is an indicator that began, I don't know, almost 70 years ago. and has proven to be a contrarian indicator on the economy. So when the consumer is very negative, tends to be the bottoming of bad times. You know when it was the highest?
When?
I got to make sure I get the date right. 2009. What happened in 2009? Just before the financial crisis, when people were buying houses with no money down, they were, you know, oh, we can get you into, yeah, you don't have the income, don't worry about it. We'll find a way to get you into your, right.
Yeah, okay.
Yeah, that's
So
when it was the highest.
What you're saying now is there's no ragtime. No
Right.
liar's loans, everything's on the up and up.
Right. Not necessarily.
Okay.
But what it says, it's factoring in what the consumer feels. In 2009, when it was at, you know, no down payments, you know, we'll get you into this, that, and the other thing, you know, people were feeling good. The confidence level was at a record high. Right now, you got high inflation, you got high energy prices, food prices are high, the stock market's doing terrible. Their consumers' outlook is the lowest it's ever been. So as a contrarian indicator, that's a good sign that it's low.
Okay. Now we'll go on to the world stage.
Yes.
But we'll explain it a little like you got a friend named Larry,
Right.
and he owes you $10,000. Mm-hmm. And Larry says, I want to pay you. And you say, nah, I don't think you deserve to pay me. Well, who's nuts? You or Larry? Maybe both.
Probably both,
But Russia defaults on $100 million interest payment. Actually, they didn't default. They tried to pay it.
right.
And who turned them down?
Well, it was the U.S.
Yeah. Explain how that's smart.
Well, I mean,
I'll let you out of this.
it isn't, but this is a big game going on. It's sort
Yeah,
of like,
it's a
you know,
war.
Russia was the only central bank this month who cut rates.
Yeah.
Doesn't mean anything because they're doing things that are far different than what any other central bank does.
Okay, so this was in there actually sort of like the sports, whether the Warriors, well, which we'll get to later.
Right.
Okay.
Correct.
Now the World Bank cut the global growth, is that an estimate, 4.1?
Right.
Okay, in January to 2.9 through 2024.
Right. The percentages don't really, I wouldn't get hung up on percentages. It's, again, like what the Fed did. It's, well, what are they trying to say? Trying to say growth is slowing down.
Okay. And you've got the oil thing here. And
Hello.
that's the story, the latest, but at the pump today it was much better than you have it here.
Correct. Oil kind of hit
But it's not
the
good.
peak. No, it recently dropped under 100, but then it's back to like 103 or so today. So,
Okay.
I mean, the average gallon is like 475 or something across the country. That's down a little bit, but not significant.
All right, now we're going to get into the serious stuff.
More good news.
The sports.
You wanted good news, more good news.
I want great news.
Yeah,
I want good.
You're
right.
going to have to find somebody else for that.
The Warriors won.
Correct.
What does that mean?
Well, it means about as much as any other indicator that people come up with or talk about on TV. Whether you're looking at Bloomberg or CNBC and they parade this person out who's dressed very finely and well rehearsed, and they come out and they say something. Yeah, this sports indicator is worth about what that's worth. Warriors won. Okay, so history shows that the best when the Celtics and Golden State play in the NBA Finals, well, one of them wins, one of them loses, and the stock market does what it's doing. So is there any trend there? There is. When the best would be a Golden State win and a Boston loss. Market, on average, was up 17% the following year. When Boston wins and Golden State loses, the market was only up 8% the following year. And these two teams both played for the NBA Final in 1964. The market was only up 15%. So of the three possibilities, the Golden State winning a championship and Boston losing the championship game, whether they play each other or not, was the best outcome. And that's what we got. So, I mean, with the Dow down 16 and the S&P down 21 and NASDAQ down 30, you got to find some good news. Yeah, there's got to be some hope. And this would give you some hope that the next year is going to be good.
And we absolutely believe it.
And of course, the disclaimer is always the regulators will say, well, just remember that there's no direct correlation between sports and the stock market.
Your results may vary.
Correct.
All right, inflation. Again, we bring up inflation. Consumer prices rose 0.3, 8.6% for the past year, highest since since December 1981, up from 8.3% in April.
Right.
Core, less food and energy, one the Fed looks at was 0.6%. Things Fed looked at up 0.6%.
Right.
And it would be much worse if you looked at food.
Sure.
May produce prices up 0.8%, up 10.8% versus 10.9% last month. Core was up 0.5%, up 8.3% past year versus 8.6% in April, which...
A little bit of an improvement. I am surprised that, people got all excited with the inflation results because, I wear glasses, but looking at it, didn't look that bad to me. The Fed looks at the core number, which takes out food and energy,
Yep.
the more volatile items, because when the Fed sets interest rate policy, that's a long-term event. So they have to take out the stuff that's really volatile, that can move quickly, short-term, because they're trying to get rates stable long-term, as opposed to, every uptick or downtick. And so that's why they look at the core number and they take out the most volatile items. Because, oil can be 105 today and it can be 95 tomorrow.
So they just want to get a steady picture.
They want to get a steady picture. I didn't think the number was that bad, actually. It's not getting worse. Probably not getting much better, but it's not getting worse. And the way the market is reacting, or some of these commentators are, oh my God, it's going to be 20% before we know it. And you can always say, well, that's not the real inflation if you go. Of course not. But these are you have to compare it to something. And these are the indexes that, have been used for decades. So you have to compare it to something. And then naturally, if all your items are up 20% that you buy, yeah, inflation is not 8.3%. But
Okay, so we have the answer to the old Henny Youngman one-liner. How's your wife? Compared to what?
Correct.
Now we know compared to what.
correct.
All right. All right, we're getting on time here. May point a negative, the leading indicators, economic indicators down negative 0.4%. 10 components give a snapshot of the economy. This indicator predicts when a recession begins after three straight negative ratings. So we're waiting for a shoe to drop.
Right. We got one. May was the second. The June rating will come out in the middle of July. That will tell you whether you have three in a row. And again, then that would just indicate, okay.
Jobless claims
closer
down.
and closer. Jobless claims continue to do well. And it's tough to get a recession when everybody's working.
But is everybody spending? Employment report,
Right.
none. it's up.
Another tremendous report. History shows you need 150,000 new non-farm jobs created each month to keep the economy going. Month of May we had 390,000. April we had 428,000. So how do you get a recession when more and more people are working? You can't.
I won't, because this is not a comparison. But I remember reading a novel by the same person who wrote All Quiet on the Western Front about Weimar Germany. It seemed there was a lot of work, but still a lot of inflation.
Right.
So let's hope that
Correct.
that everybody.
And we had that situation in the 70s.
Yeah.
So you want to take a look at how things look, what we're thinking for in July. It's a great month. It ranks 4th of the 12 months in stock market performance historically. And the last 7 years, the last 7 Julys have been up.
You can't fight history.
Well, you could, because the last 3 Junes were up, and it didn't quite work out that way. But there's a lot of, I think there's a lot of, this show was a 4-letter word. So it's a lot about hope.
I'm glad
Some
you.
other stuff too, but we won't go.
Michael.
We won't take it to that extreme.
Always a great pleasure.
All right.
Thank you very much.
Thank you.